Good morning, traders. This is Chris Buss with Traders Profit Compass with a morning look at markets for Wednesday, July 29th. What I want to do on the indexes is do a reset and zoom out to the daily charts and then refine it, looking at the 2-hour charts and the 30-minute charts as we head into a big couple of days of macro events. We've got the big four big cap tech CEOs on Capitol Hill today. Depending on how the questioning goes and the responses could be market moving on those particular stocks and on the indexes. We've got the FOMC at 2 p.m. with a presser at 2:30. Then tomorrow we've got big cap tech earnings with Facebook, Apple, Amazon, and Google all reporting after the bell. So that'll be poised for a potentially big market move one way or the other. So looking at SPY on the daily chart, we've got this big uptrend line off of the March lows. Price working its way into this bearish rising wedge. We made a run at filling the gap from the March gap down between 323 and 329. We fell about $2 short. We got up to 227 where price was rejected, and we've been hovering in this 323 area for the last 3 days. Notice we've got bearish divergences in place. Price made a new high while PPO momentum and RSI made lower highs. So that's your bearish divergences. To me on this chart, there's just a couple of key levels. Recapturing 323 is key for the bulls. This support level at 314 is a key level for bears to break. If bears were able to get back into this 314 trading range, that would make all this look like a fake breakout and would target the bottom of the box down towards 300. Now I wanted to make point of this. Way back at the time when we had this trading range from 300 to 314, TA 101 says if you break out of a consolidation range, the measured move target is the width of the box. So that was $14. And we penciled in a technical target of 328. We got really close. We got to 327 where it got rejected. So the same kind of rules apply. If we drop back into this trading range, it's going to target the bottom of the box. So on the daily charts, 323 is upside resistance where the bulls need to break back above and try and fill this gap. Bears are going to try and keep it below and push it down to 314 and try to break that and bring price down to 300. Also note we've got the 20 EMA and the 50 EMA and the 200 EMA all pretty much aligned. And notice this 200 coming in real close to the 300 level. If we got down that far, that would be a really important test. If we were to break 300, then we put in a lower low, and that would open up a lot more downside. And you notice all these open gaps below would be natural targets to backfill if things really started falling apart. So moving down to the 2-hour level, we've got some real clear looks here. We had an initial uptrend line which was broken up here as price tried to fill this gap. got rejected at 327, broke the trend line, came back into this trading range, which now favors a move to 319, using the principles that we just talked about. Notice the RSI has dropped below 50. That's a bearish flag, and PPO momentum is poised right here at the zero line, very important level. That could turn up, which would be a bullish move. If it breaks lower and RSI follows lower, that would be a bearish move, favoring tests of this 319 and 318 level. As we talked about before, a break of 319 and especially 318, where there's a minor level of support, would favor a move back down to 314. So those are your key levels. A break back above 323 takes the immediate pressure off, and gives bulls a little bit of hope to jump back up into this range. Anything below 323 right now looks bearish, with a target of 319. Yesterday on the 30-minute chart, as we discussed last night in the recap video, had an uptrend line which was violated in the last hour of trading, which brought price down to this 321 level, which is exactly halfway between 323 resistance and 319 support. If you're an active trader, I think you can use this as your pivot point. As long as price stays above 323 is your target, but if price breaks below, 319 becomes your target. So I think that's a real clear level to shoot against if you're actively trading. I don't want to make any guesses of what might happen before or after the FOMC, other than to say a good rule of thumb on the FOMC is the first move is fake, whether that's down or up. You may want to step aside right before that announcement, just to avoid some knee-jerk reaction risk, and play it safe. See how it settles out before committing any capital to the trade. And especially tomorrow, I don't think it's really wise to carry a lot of overnight risk with $5 trillion of market cap reporting after the bell. That could really ruin your day after hours if you have a big position. So be cautious with these macro events, but until then, I think 321 is a great level to shoot against, either above or below. Moving on to the Qs, we had this really nice uptrend channel working really since mid-April, early April. We made a run towards the top of the channel, which failed, and now price is clinging to the 20 EMA just below the channel. The 20 EMA is at 255.39. Breaks below that would probably favor a move here down to 252. A break below that would set up for a test of the 50. But it's so close here to the channel. I mean, tomorrow after the bell, there's certainly the firepower to break it back up into the channel and put bulls back in control. So very finely balanced here. Technically speaking, the PPO is rolled over and the RSI is pressing against 50. Slight bearish posture, but not enough to make get into a huge position either way. Personally, I'm going to let that big cap tech earnings clear and see which way it breaks. I think there'll be plenty of time, either on the bull side or the bear side, to take a position after that clears and be in for a longer term trade. Looking at the 2-hour, we've used this 259 level very effectively as a pivot point on this time frame. Price spent a lot of time hovering around this 259 level before yesterday afternoon being rejected pretty impulsively back down to this $1 gap that we have right here between 256.45 and 255.56. If price were to break below that today, I would expect that gap to fill. If we moved below the gap at 255 spot 56, it would favor a move down here towards 252, 251. Any break back above 259 would be bullish. That's what the bulls are looking for. A break above 259 would favor a move to this 262, 263 area. If I were actively trading it, I would be looking to fade 259 if price pushed back up there, given that it has had trouble breaking above in the last few days. I wanted to make note of the indicators. RSI is below 50, and it's been below 50 for a few days. That's in its bearish regime, anything below 50. And for the first time on this whole chart, PPO and its signal line have moved below the zero level. So both indicators, for the first time on this whole chart, are both below and in their bearish regimes. And I think that's significant. That's showing the first real signs of weakness since the uptrend started. And I think it's something to pay attention to. Now, as we've discussed, with all these guys reporting tomorrow after the bell, this could easily turn up. There's the firepower to do that. But as it stands, this is a bearish posture. Moving down to the 30-minute chart, it's quite clear we've got a downtrend line coming off the recent highs. Prices moved decisively lower, below 259 and the trend line, sitting on this $1 gap. I think a move back up to the trend line and 259 is an opportunity to fade it if you're actively trading. Any break above would be very bullish and offer the opportunity for a rally to take it back up to 262. That wouldn't be my base case. I'd be looking for this to stay below trend, at least until these big cap names report. If for any reason this gap were to fill today or tomorrow, breaking below this 255 level, I think you'd see a quick move down to at least 253 and possibly this 252 level where there's another gap. So be aware of that. Moving on to IWM, on the daily chart, we've got an uptrend line coming off the April lows, moving up. Price has been in a consolidation range between 145 and 150. We could easily box that in, that $5 range. A break above 150 would favor 155. A break below 145 would favor 140. We've got a $3 gap just below 145 in the trend line. So that's a very clear line for traders to shoot against. You can stay long against 145 and look for a move back up to 150. If it breaks out above 150, you'd be looking for 155. Any break below the trend line in 145, you're looking for a quick gap fill to 142 and a measured move to 140. The indicators are still in their bullish regimes above 50 and above 0. So until those break lower, support is support until broken at 145. So that's your key level. 2-hour chart, we get a little more refinement. We've had this line, this level here at 147.50. You can see we were below. We broke above. Notice that measured move, $2.50. We got the $2.50 measured move up where we got a rejection. Now we're back down in the prior range. I expect this to come down to test 145. Price is kind of in no man's land here. I don't think you can really take a position. I think you've got to wait till 145 is tested and then see if it holds or if it breaks. If it breaks, as we discussed before, look for a gap fill down to 142 and possibly down to 140 on a measured move. Any break above 147, I think you can be a buyer there and look for a move to 150. Here on the 30-minute chart, a lot more detail. As we discussed last night, although we've got this level here at 145.60, I think you just let that go and look for a test at 145. If it breaks, looking for a gap fill. If it holds, you're looking for a move back up to the top of the box. So that's where we stand on the indexes. We're waiting for Boeing to report this morning. I'm sure that'll have an effect on the Dow one way or another. We got the FOMC at 2, big cap tech tomorrow after the bell. Be careful with your position sizing and your overnight risk, especially tomorrow after the bell. Trade light. Don't make any big commitments in front of these macro events. Good environment for a lot of whipsaws. So anyways, that's the way I see it this morning. This has been Chris Buss with Traders Profit Compass. Please check out the show notes for links to subscribe and join our group. We'd love to have you. I publish at least 6 times a week and often intraday with updates. You'll get all those updates in your inbox and your email. It's all free. Check out the blog for additional details and helpful articles on trading, charting, and trading psychology. Again, this has been Chris Buss with Traders Profit Compass. Have a good trading day.